what happens is commodities tend to trade at their cost of production, especially agricultural commodities. And corn is headed down towards that area. Since 2007, corn has traded between $3.50 and $4 quite consistently, which seems to be the futures equivalent here in the United States, a break-even price of production. So you naturally are going to be reticent for prices to move much below that $3.50 to $4 range. Now that you've moved back down towards them, it's been 3 times since 2007 that corn has been between 350 and 4 and jumped up to between 7 and 8. So you've had, in essence, going by spot corn futures, 3 doubles. And that's the commodity sitting in its cost of production, which when that happens, you do tend to have limited downside and more significant upside potential. If that were happening in crude oil, which most people seem to think, crude below 50 and headed towards 40, people get really excited and they start buying crude oil because they know that because of crude oil's pervasiveness throughout the economy, eventually something will happen and crude oil will bounce off of that cost of production area and go higher. And in fact, since 2006, crude has done that 4 times. Crude has doubled 4 times from a number generally between $35 and $50. And sometimes it's more than doubled. It hit 120 at one point. So 4 times since 2006, crude oil hit its cost of production area. Let's call it between 35 and 50 here in the U.S. And corn, 3 times since 2007 has done the same thing. When it hits between 350 and 4, at some point it is up.
Yeah, I hear you, Sal. So you're talking about a situation where this is pretty rare air. When we're sitting at a point in time when corn could double yet again. So if you're an investor, that sounds like good news. If you're Kellogg's, you're maybe not so much, right? But what happens in these cases? I would assume that companies like Kellogg's, obviously they can hedge corn prices in financial markets. But I mean, corn has a shelf life. You can't stock up, right? But you can't
that's right,
and
that's why prices, when they move dramatically, and you don't know when it will happen. That's the thing. So it generally becomes a drought that causes these price spikes that happened in 2007 and 8 with corn. It happened in 2010 to 2012. In 2020, of course, happened. You had things start because China became a corn buyer and a wheat buyer in global markets. And then in 2022, of course, you had the invasion by Russia of China, which boosted all grain prices. So what happens is you've got very steady demand. People have to eat. It doesn't matter what's happening. They're going to eat. They're going to use that corn, which is everywhere in the economy, like oil. And at some point, and again, past history, we don't know if it'll go up again, but it's happened 3 times in 2007 from these levels.